On guys, well, hey, today I didn't go live. I know, but I posted in the YouTube community section. Woke up with a massive headache. Yesterday I went to sleep with a headache and woke up with one today. I haven't had a headache like this in a while now, a good while, but I just couldn't. I couldn't bring myself to stream this morning. So I said, I'm not going to stream. I'm just going to trade, and then I'll do a little video recap for you guys. Problem was I didn't want to go live on the stream with a headache. I've done it before, and then I have my attention split in so many different ways that I don't give you 100%. I just don't bring it. I don't bring it, and if I wasn't going to bring it today, if it wasn't going to be brought, then I wasn't going to come out here and do the stream. But I will be back tomorrow, 9:15 a.m. Let's jump into this recap. Check out these live trades on the ES. All right, guys, so today I have two trades for you, both recorded here. Smaller trades than usual, smaller size, smaller moves. It's looking like it's going to be a little bit of a grinder today. The SPY's right there, trying to hold on desperately to that 50-day moving average, to that 200-day moving average. All right, guys, before we move any further, yes, I have been trading in a prop firm. Yes, I am working on an addition to the day trading course over at the DTC. This day trading course is going to be centered around how to get funded with a prop firm and my strategy. All right, that's what it's going to be about. Back in December, I went ahead and went on a mission to get funded with a prop firm. But before that, I wanted to look for a prop firm that I felt was friendly to new traders. One that didn't have 15 million rules that basically trapped you into blowing up each and every time so that they can just make more money and more money and more money. And I found the one. So far, it's been great. So far, I like it. I enjoy it. I wanted to bring that to you guys, but it wasn't as simple as just bringing it to you guys. I needed to prove that it could be done. So I went in, got funded, and here we are. Now, am I going to trade in a funded trading account for the rest of the year? I don't know, maybe, probably not. Might trade it every so often, and then might continue just trading my real account every so often, just split it there. Generally speaking, that's probably what I'll do just for, making content on it, because the reality is that I don't have the need to trade in a prop firm because I'm not trading there because I don't have the money. You guys know I trade my equities account, I'm going to trade my futures account, and then I'll have the prop firm there just so that I can continue making content for you guys. Why? Because I know that when you start off as a new trader, you might not have the funds, the capital to go out there, open up any of these accounts, and you might be starting off at the basics. And a prop firm is an excellent area, an excellent place to start to learn to do these things. And to get funded and trade, you can trade in a prop firm for a couple years or a year, make a few bucks, and turn that into your own account, right? And you're going to be there trading the prop firm's money. So as long as you get, obviously, past your evaluation. And that's what I'm going to help and try to help you do past your evaluation. So if you want to learn more about the prop firm I'm trading with, there's a link in the description section and in the comment section. Make sure to check that out. Right now, January 25th, for the rest of the month, they have a 60% off lifetime code. It's going to be down there. Make sure you check that out there and take advantage of the 60%. So this morning, very simple. I was short biased, but it was a difficult trade to go after because the market was just sitting in front of so much support. You had the ES sitting right in here in this 390 to 380s area, and that little 10-point range there was extremely difficult to trade because every time you got down there to 3980, right, that 3980 area, you bounced right off of it. Just take a look right here on this 3-minute chart. Let's turn this into a 3-minute. Look at this, 3980, bounce, right into where? 3990. And then we reject it. We come down here to 39.86, try to bounce. We come down here to 39.80. And believe it or not, this candle right here, it fought really, really, really hard. So that was my second trade of the day. Got short in here. Just a couple of contracts when we broke down, looking for that extension lower. And I got it and took profits along the way. Now, I'm going to show you both of those trades here. And give me 1 second. I grab them. Here is the first trade. I'm going to show you the first trade here. The first trade I actually entered before 9:30 a.m. Now, what I want you to notice on this trade is what I was trading. Making sure you can see that there. You can see that I was trading a bear flag formation, all right, on the ES here. And I got short when we broke down and underneath that level, all right. This trade was very short. It was only 4 minutes and change. And you'll see we break back into it once the bell rings, but then we start to sell off. So I add 3 contracts total on this trade, and I really thought we were just gonna flush. What I was thinking was, we're at 39.80 area. I know this is major support. I definitely want to try to get some profit off in this general area, but I want to hold on to some. I was being a little greedy. I want to hold on to some here, seeing if we can get that flush through 39.80, and just, this is a banger, right? Right out the gate in the morning. All right, and watch. I'm gonna fast forward just a tad here. I'm holding. You can notice I haven't even put my order out yet to cover. There we go. We start to extend. I start to put out my first order to cover 1 contract. That 1 contract was there. What is that? 39.80, 50. Looking to get at least 1 to be covered there. And there we go. We get that. And I'm there at that point sitting pretty. I'm like, bro, this is awesome. You know, this bear flag is going to turn out to be a banger. We're going to break that. We're going to get ourselves down to 39.70, and it's just going to be an awesome way to start the day. But lo and behold, as I get ready to put out another order to cover some more into those 39.70s, right? Watch what happens. We kind of stick that right there in front of 39.80, and look at this bounce back. So right there, I cut it, right? I stop out of that. It's still a good trade. Still banged out about, what was it? Let me see, I'll tell you right now. Still banged out a little bit over 300 bucks. Not bad, right? Why? Well, first take profit, bang. Second take was basically on a break-even area, and that's it. I cut it there. Now, what happens shortly after that? Let me show you. This is that area, see, 39.80. Boom, we push up here, break 39.90, that's resistance. We extend a little bit higher and then reject, which is generally, you know, kind of a choppy move. Now, I sit and wait and wait and wait. Why? Because every time in the live streams, what do I tell you guys? I tell you guys that I'm gonna wait for what? My setup to come, give me a pattern, give me something that I can actually trade and feel I have an edge, clear defined stop loss area, and clear defined profit taking zones. So I wait and wait and wait. And boom, we get our next trade here. As we break down here on the low, I think to myself, you know what? This should flush at least 10 points or so, and I want to be a part of that. So 1 contract in here. This is a much smaller trade. Okay, I only take 2 contracts. This trade lasts only 3 minutes or so. So I'm in there with 1. Oh, that's right. You don't get to see it here, the second contract. Okay, you don't get to see the second contract here because I get in 2 contracts up here. I throw out a cover down here and I catch that cover, and then I hold on to this last one as a runner. Now, the reason I'm trading smaller today was twofold. 1, I had that headache still going on, and I've known over the years, whenever I'm not in the zone, I need to decrease my risk, because there have been times where, because I'm not fully 100% there, I'll miss something. I'll miss a signal that can cause me to be in a bad trade. So I said, you know what? If I do take a trade this morning, I'm going to take a smaller trade. Now, also, I wasn't going to be all about risk today. Why? Not to the downside anyways, because you had major support zones. I thought they were going to break. I just didn't think they were going to break very easily and flush out. And so far, that's been exactly what's happened. We've held 39.70 extremely well. So I already took a partial off here, a cover, and then I hold on to this one to see if we're going to get underneath 39.70. I had another order that I set out in a little bit here in this live trade at 39.65 and change. I was like, that's a banger, right? That's a banger. I'm already up 4 points and we're sitting at 39.72. Then you see me put out that order to cover 39.65.25. But in my mind, I know 39.70 is going to be a support zone. So I'm not going to be extra greedy because we can easily reverse off of that. And before you know it, you're right back at 39.86. All right. 10 a.m. rolls around and we get that action after the Bank of Canada puts out its information, keeping interest rates in line. So that's it. Those are my 2 trades this morning. Stop out of that last piece again at break even. So really what happened today was my runners didn't give me the run, right? My runners didn't give me the run, and that's fine. This is why I'm always talking about scaling out. Because if you scale out, you allow yourself to put yourself in 2 different positions, right? You can scale out leave the runners to go into their next profit target areas, and that's going to help you, right? Because depending where your stop zone is or where you have moved it up, usually according to the chart pattern and the price action, you are allowing yourself to either be at break even on the remainder of that position or at a slight loss on the remainder of that position, making that trade either profitable, break even, or slightly red. And that's the beauty of, being able to scale out. It also allows you to stay in winning trades longer. Go look at your statistics, and I bet you anything, your losing trades are longer than your winning trades. And that's a problem. And how do you fix that? You fix it by scaling out. Guys, I hope you learned something here in this recap today. Any questions, drop them in the comments section. Hope you're having a great day, and I'll catch you tomorrow in the live stream, 9:15 a.m. Peace.